3, 2, 1.
Alright, so hi guys, welcome again to the channel. Okay, so today we're just going to continue on from what we were talking about yesterday. So I'm just going to back up here a second. So we were looking at the S&P 500, right? Primarily because I'm selling some options. So I'm selling some put options, not on SPX or the SPY, but on Shopify. So I've got some Shopify puts and that I've sold. And I was looking at us probably bouncing somewhere between either was on the bid stack a little bit earlier on or going through value and bouncing off value low. Obviously, as we were sort of approaching the Fed, we were trading considerably lower and I was anticipating the bounce. Now, we did get that bounce briefly. However, we closed a lot. Well, we came down a lot lower. We haven't closed the week. So I guess it's all eyes now on the open. Because again, if we start to track back into the S period print, then that would mean the R period print is likely to go. And then we're probably going to drop a little deeper. And that could be quite a significant drop. Now, when we look at the volatility plane, though, of the S&P, we haven't really seen that kind of drop in some time. So we're kind of now close enough to where we were a couple of weeks ago in terms of volatility. Like slight expansion from what we used to seeing over the past, say, 4 weeks. But obviously last week, the lead up to the Fed, obviously we had some extreme price action. Remember, guys, these are weekly profiles we're looking at. So naturally, we're going to see something different, say, for example, than if we were looking at a daily chart, right? So we're getting a more rounded, holistic view of the landscape. So for me, when we think about the S&P structurally, there is not a lot of case for downside movement. Okay, so if we do pull lower, it's all just about buying the dip at this stage. I wouldn't really think that. I mean, we have a solid bid stack at 390, 975, so that should be good. So I'm of the opinion my put options are going to probably expire out of the money this week, which will be great for me. So that's kind of where my head's at with the S&P. So I will be looking today specifically for some upside pushes and how that impacts. Obviously, weirdly enough, Spotify's traded a little bit stronger than the S&P. But again, if the S&P does go up, you tend to find that a lot of these stocks will move alongside it. So it's always a good benchmark to keep an eye out. Now, again, I do run an extensive course program on Market Profile. So again, I will leave links in the description below, which will take you to my Discord. Again, you can check us out there and see how we generally do things. But again, when we look at where the S&P 500 is coming from, so we had a nice little upswing. So we had a nice build up at the base. We pushed higher. And as we moved lower, you can see those, as we hit out on value lows, we had those nice volatilities, and then we had this big expansion. So usually you tend to see these when they're news events. I think I mentioned that in my last video. Whenever there's something big going on, we get this huge expansion in volatility. But once we traded into the bid stack, that was pretty much it. You could literally position against the week. I mean, again, if you were doing a cash, if you're doing a cash index trade, right? So if you were just trading the spot index, then you could literally set your stops. I mean, it's a good 82 points to be fair, but again, when you think about the upside swing on this thing, it was pretty decent. So yes, you would have held this position for a couple of weeks, rolled into it until we got to the upside and retested the highs again, and then we got that major stop hunt, and then we started to move lower. So once again, this was a good place to buy. There was a lot of demand here previously, and this would have been strong weekly demand because we had a lot of accumulation here. And that's a good thing about the profile. You can actually visualize that. You know, we had a perfect bell curve here. And then that's where we traded down to a value low and then popped out of there. So again, even when we close the high, so any trading, any dip backs into value lows give you good trade locations. So anyway, that's my perspective on the S&P. Now we're trading value low against last week. We're still pretty high. But again, we haven't seen a major stop hunt to the top yet. So we're just trading a mechanical high. Yes, it's possible we could dip back lower, but again, for me, any sort of pullbacks would be very good by the dip opportunities. So yeah, I'm still relatively bullish on the S&P. I did think we had somewhat of a gap fill, and because the profile's a little bit filtered, I can't tell, but I think we did, right? And by gap fill, I mean we traded the gap here, and if we have done, we got a nice little bounce out of that, mind you, and we closed considerably higher. So it is mimicking a gap fill. But if we haven't, then we're likely to retest the gap again and then go. Crude oil isn't the interesting one for me this week. It is Thursday. So with crude, it can get a bit wild. So I won't be surprised to see us back up here again. But on this token, I did say yesterday that as we sort of tore through this level, I said our next stop would likely be 68.71. I didn't think we'll get it this week, but we did. Fair enough. And then we traded value low. So we did another trade through value. And then we actually traded to the bottom of this value and nearly the low. And then we bounced, right? So this is a huge amount of rejection, right? So a lot of responsive buying at this stage. So for me, I'm waiting to see how next week opens, right? Usually if we form a balance and we break to the upside, I wouldn't look for short plays. And there's a good reason for that, is that we're too overextended. The rejection at S period is telling us that we primarily don't want to look for short plays. So I won't be looking for short plays. What I will be looking for is for a nice balance to form and then an upside break back into value. Now we have an overextended value area, so I would expect that we will be trading, we'll be sort of halting about the midpoint. So we have to build, we have to consolidate. We've had a huge imbalance. We need to rotate back to balance, right? And again, those are some of the concepts you kind of learn about market profile as you go along. The theory of imbalance, the balance, the test, right? So again, this is some of the things that really help you when you're determining what the future is going to look like for a lot of these plays. But this was a really interesting drop on crude. And again, just mimicking what we're talking about in the S&P 500, you can see we pulled back and we traded the top and we got that mass liquidity hunt or stop hunt, and then we pulled back lower. So again, as we started to move down, it was presenting a really good opportunity to be short. Now let's talk about, a position I've currently got, that's the pound. And we discussed this as well in our live room. One of the things that I was talking about was the pullback into value, right? So we were here and we traded the gap, right? So we filled the gap initially, pulled back K period, and then we had some responsive buying and then we held. But on the drive in, I was looking at this bid stack and saying, well, these are currencies, so we tend to trade these a little bit more aggressively, right? So they tend to go through liquidity a bit stronger and trade out those value lows. So as we moved in to the value low, it became a good buying opportunity. And, if you look at, I'm just going to pop on the screen now, so you can see my actual position as it stands at the moment, and we're now pulling up here. So my synopsis is that we move a little bit higher. I've marked out the 126.35 level, but again, with structurally the way we're set up on cable, I won't be surprised to see us all the way back up at the 130s. So it does look we're in a bull market, and that's the importance of drawing structure. And again, this is something I show you guys how to do in my programs, but you want to draw structure so you can see where this thing is going to go, right? But for trade location, you couldn't get a better trade location. I mean, on the pullback, you just got to be able to see this, right? It's all about range sometimes and the overall volatility in this asset. The good thing about the profile is you can see how volatile cable has been over periods. With currencies, it can be a little bit harder to determine volatility, but they're a little bit thicker than, say, the commodity markets, for example. But again, you can see that bounce here, and then we're pushing upwards. So again, depending on where we close this week, we could get another strong push to close off the week. So it's rather late. I mean, if you're trying to buy the top, you have to think about it, that it's poor trade location. So I wouldn't be long here. Definitely not. So let's see how next week opens. If we start to track back, it becomes a good place to add, right? So as we move back into this area, we're looking for those points now where we're going to see rejection. Or sometimes we might just open and then start to retest the highs, right? And then we start to form a nice little balance here, and then we get a break, right? So then it's not a bad idea to trade off the break. If you already have an existing position, then you just want to stay with it, because really and truly, trade location is everything, right? And I talk about that a lot in my programs. Trade location is everything. It gives you the best risk reward, even if you're trading near enough the top. If your trade location is good, you could probably get some quick profits, right? Especially if you're trading a smaller time frame, you can position in the weekly time frame. And I'm, you know, again, if you looked at the diagram I put up on my actual position, you can see how tight I am on risk. And that's because from where I'm trading, or why I picked that position, it was really easy to position my risk sort of below sort of hard to get areas, right? And I think that's pretty crucial. Dollar yen again played out exactly as we were thinking, right? So we had a fail. So it's a failed break of the balance, failed to retest the highs, and then we came back under. So we were looking at a gap fill. So this was a setup of a trade. Now, if we put that into context, it was 167 ticks to the low, right? So now I think we're at the point where we're getting rejection from this value. We're on a bid stack. It's not a bad trade location for a swing long dollar yen, right? Now, again, if we sort of consolidate here and we continue, then you're looking at value low for a retest, and we'll also be trading this value. And again, you know, I don't want to go into too much detail around overlapping values, but, you know, when we think about the volatility of dollar yen historically, I would say that this is the furthest we're going to go, right? So that's about 133.30 towards value low, and that becomes a good buying opportunity. So for me, this is how I look at the market, right? This is how I look at things. And that's why the profile is so important to me. And there are other nuances as well that, you know, that are worth knowing as you trade through it. And it really helps you build perspective. Now, one of my weaker positions is dollar CAD. Now, again, I was looking more to be short the dollar versus the Canadian. Right now, we are consolidating here. Now, there's a very good chance that we get an upside break. I mean, what was really guiding my decision was the fact that we had a rejection at this value high, huge pushback. A retest of that high should have made for a good sell. I think I was a little bit ahead of myself, so I traded this a little bit deeper than I would like because I was expecting a balance break into value. Didn't happen. Reversed, and now we're trading the office stack. So let's wait and see. If we do break above, I don't think we can make it past the highs. Right, it's very possible that we might get a slight liquidity hunt and then we fell. I'm not exactly structurally, it's a little bit harder to determine on dollar CAD, but I think structurally the dollar should be weaker against the Canadian. And so I've had a short position on this. So yeah, I'm just waiting to see how this one plays out. So as you can see, I'm not overloaded on trades. I've only got 2 going at the moment, and one of them is kind of hanging on and the other one is doing incredibly well, right? So again, I'm not overweighted. So again, it's just some of those lessons that you learn about overtrading. But again, when you think about where we're trading from, the best trade location obviously was at value lows from prior weeks, and you can see that bounce here and the close. And as we opened, the moment we started to trade back in a value, this became a great trade. And then you can say, well, look, this is something I can run for the next 2 weeks because we're going through value. We had a nice top close. We have formed a gap here, mind you, and now we've traded up to value high. So that would have been my take profit. I'm not surprised to see a big build up here as traders started to take profit at that value high. So hence I'm expecting the downside. If we do get continuation, then obviously these bulls are still in play, but I will be looking again for the short side. Whether I'm going to pay attention now as to see if we get any more rejections, or do we go up and we get a stop hunt? Because that's what's going to happen. If we do push to the upside and we get liquidity up here, then we're coming straight back down again. So I wouldn't expect too much continuation. I would just look for the failure and then look to short this. So hopefully this has been a really good video covering these assets coming into this week. Once again, guys, don't forget to like, subscribe. You can check out all the links below in the description. But till my next video, guys, adios.
3, 2, 1